Hi, everybody. Welcome back to another episode of Not Another Fucking Podcast. Today, I've got my guest, Anton Golub. Have I said your name right?
Perfectly, yeah.
Perfect. Cool. I should usually check that before I make intros. I didn't.
I get it off, no worries. Yeah.
Awesome. Cool. Well, yeah, if you'd like to introduce yourself and give us a little bit of background and how long you've been in the Web3 space, and then, we'll take the conversation from there.
Awesome, yeah. So first, thank you very much for inviting me to Not Another Podcast, I hope it's going to be a blast and really great to be here. And to mention my background now, I'm like put a bit on the spot, but let's say like that in one sentence, and I'll say it in a bit few more sentences. Very passionate about technology, very passionate about crypto. I've been in the crypto industry for more than 10 years. I see crypto and blockchain and everything that we are working on as a big opportunity to open up the world of finance to everyone, to mainstream, to our parents, to our, family, to everyone, And I've been really fortunate and blessed to be a part of it since the early days, back in 2013. And today, as well, contributing to crypto industry in the Middle East, in the UAE. And just thinking that we are at the beginnings, and we're going to have an amazing, next 10 years of crypto industry, and just super, super happy to be a part of it. So that's like a one sentence explanation. What am I about,
That's cool. Yeah. No, that's good. And yeah, like obviously 2013, that's pretty early days. Because that, I think a lot of people who are sort of in the industry now came in sort of 2017 when I came in. And I think a lot of people joined sort of like 2021, but I don't really call them like Web3 native, I'd say, because it's been it's not that long, right? Yeah. But no, that's awesome. So like 2013, like you must have seen it go parabolic a few times. You must have lived through the Mt. Gox hack. Like that obviously was a precursor to a lot of things that have happened. So that's really, really fascinating.
Yeah, I mean, it is. And also, I mean, just to say, I mean, you mentioned something very interesting is like, implicitly, you kind of said it, how much the industry has changed. If back in the day, actually, Mt. Gox was the biggest crypto exchange in the world. Today, nobody even remembers Mt. Gox unless you were there, where it blew up, And I think that also like emphasize, like the way I describe it is like how much we have grown, is that back in 2013, you had this like run up and then it kind of had a crash and then Mt. Gox exploded. The market cap of the whole crypto industry back then, I still had the screenshot, was 1 billion. Yeah, 1 billion. That's how big it was, it was small, obviously, right? And, today it's actually, I mean, depending on the price, obviously, but it's like 4 trillion. So it's 4,000x increase, price-wise at least, in the 10 years, So I think it just shows how early it was back then, but also how fast we're growing, right? Because people also anticipate something like this, not like that growth, but, it will continue. And to be honest, it's just been a blast so far. But it was in the early days, I tell you, like, because I came from the hedge fund background. I was a trader at the hedge fund. And imagine then you start to create a startup and then people ask you, but what are you actually doing? And you're trying to explain if it's anything. And then if they heard anything, they would say, what is Mt. Gox? And by the way, they would also ask, what is Silk Road?
Yeah. I remember. Yeah, like, I mean, to be fair, that was my first sort of like mention of Bitcoin, I guess. At university. Yeah, it was at university. A friend of mine was like saying, "Oh yeah, I'm buying drugs on Silk Road."
That's like what it was actually.
And then we're using this money. And at the time, I was kind of like, "Oof." I mean, hindsight. I don't even know whether or not, because a lot of people I think they didn't actually ever hold Bitcoin. I think they just used it, traded it. But I never actually caught up with him, and I should ask him, hey, did you ever still have some of that Bitcoin lying around after you were using it to buy? But yeah, like I think a lot of people's introduction was a bit like that. And I had heard of Bitcoin prior to 2017, but I think one time I heard you could mine it, but then I think it was like 2013, 2014, I tried to mine it. At that point, it's too late. You couldn't do it with a normal PC. You needed to have like a proper, I think, were ASIC around back then? So you probably need a proper ASIC mining rig then to actually mine it. And so I think it's just one of those things, not being informed, but, kind of really being involved in 2013 and knowing of what's happened with Mt. Gox and stuff. And it's funny because I think Mt. Gox originally wasn't like it tended to be a proper exchange. Was it a trading platform for a card game or something?
Exactly. That's where the name comes from as well, right? Because Mt. Gox, if you think about it, is not crypto related at all. But it, but it was actually, I don't remember what was the actual game, but they were trading like these cards there. And I don't even remember like in what context. And then the guy who was running it pivoted into crypto actually, because, I don't know if it was related to any way with the card games, but, and also, I mean, just to say, it's like Mt. Gox was very unique compared to all exchanges that you had afterwards, because Mt. Gox back then had 90% of the volumes. So not 19, but 90, So when it blew up, it was such a big hit for the industry that I do recall it actually, like really, like if you were you were pitching the company, doing fundraising and everything, like you can imagine it. And then like imagine first the question is like, what is Mt. Gox? What is Silk Road? It wasn't easy actually for, to demonstrate why you actually believe that, okay, crypto as a whole makes sense, but also why the technology makes sense, because people are saying, yeah, but you're just not using it you're using it for the wrong purposes, not for the right ones. So, and to tell you, like also big difference was prior to 2018. So if you joined to 2017, prior to 2018, you really did not have regulation pretty much anywhere. There was really, and then kind of after 2018, after we had the run up and the ICO bubble, and when it all blew up, there was a lot of regulators who really stepped in and tried to holistically provide guidance or regulation or whatever for crypto, And I definitely say that, that's how I experienced it, was definitely a different phase. And maybe even at that point, a lot of the infrastructure that we use today in crypto, or the exchanges used today, was built kind of initially was envisioned in this 2017, 18. And then it was built for many years that we actually use it today, like custodians, settlement solutions, KYC, AML providers, market makers, exchanges. A lot of them were actually kind of built out in this phase after the ICO bubble.
Yeah, I remember Binance. Like 2017, no one really trusted, but like then it was only Coinbase realistically. And then you also, I think Kraken was quite well established then. And I think people would be comfortable with Kraken. But when Binance first came along, everyone was very when Binance first came along, everyone was kind of a bit skeptical of it, and yeah, because it was obviously run out of Hong Kong, or he was run out of multiple locations at the same time, and there was no central proper entity. I think people had more confidence in Coinbase and Kraken because they were both US based exchanges, right? So they thought that there was more security in that respect. But yeah, look at the behemoth that Binance has become. It's crazy.
It's true. Yeah. And also, I mean, just to say, like I think it's a very unique feature of the crypto industry is that you have so many new players who kind of come out of nowhere and they succeed, because usually it's not the case, right? If you have social media, you have like, it's Facebook and Instagram, and I don't know how many years or whatever, it's like very difficult to break in. And with crypto, that's not the case, And I also give this example. So after Mt. Gox blew up, most people don't remember the biggest crypto exchange back in 2014-15 was Bittrex. Bittrex doesn't exist anymore, And then after that, kind of this new player from China came about called OKCoin. I don't know if you remember.
I remember.
Who was the CTO of OKCoin? I don't know if you remember that.
No.
I remember. Actually.
Was it?
It was easy. Yes. And, then they kind of grew, and then Binance really came about, and they had this like really, amazing product market fit at the right time, is that there were so many of these coins popping up in the ICO bubble, but nobody wanted to list them. And Binance basically said, come in, we will list you. But because they didn't have the fiat leg, it was always coin against Bitcoin. And only later on they would add it, And then also, I give this example, then BitMEX came about through perpetuals,
Yeah, I remember BitMEX.
They were so close to getting it, And then, but when COVID happened, then, obviously was a lot of volatility, and a lot of people got liquidated through perpetuals on BitMEX, and it really hurt them. And then they had problems with the regulation and regulators and so on in the US. And then FTX came about out of nowhere, right? And then the FTX, it's like, if I keep on going, I should just stop talking about it. But I think I'm sharing also when it kind of didn't play out, but it just shows that in this space, because it's so innovative and so fast, it's actually a massive opportunity. And even though we said now Binance is a behemoth, they're huge, who knows in the next couple of years who will pop out and who will, maybe Hyperliquid. Hyperliquid is not.
I think that's one of the ones that no one's really talking about yet. If you look at the back end of how many people are using it for perpetuals, how many, how many people are kind of like old school in crypto are talking about it and how popular it is. And it's crazy the growth that has had in such a short time frame. Everyone's just talking about Bitcoin right now, which is obviously that it drives the market. Like there's no way around it. Like Bitcoin really does drive the market. But and like FTX, man, that blowout was crazy. And it just shows that, like, I guess that's the trajectory I maybe envisioned Binance going before Binance became its own thing. And I think BNB really, that's where Binance kind of grew astronomically, is releasing their own chain that was cheaper and more effective than Ethereum. And I think that really, really kind of put at them in the forefront, and that sort of saved them, I think, in some respects. But that's a whole conversation in itself. But with FTX was just absolutely crazy. With what they got away with, what they did, and Sam Bankman-Fried was, I guess, very. It's sad because, like, he built something, and if he had not been greedy and didn't try to essentially arb by using customers' funds, it would have been a successful business. Like everything else he was doing was right and smart. You know what I mean? Like, and if he just had not been greedy in doing that, and anyway, like, again, it's crazy how that blowing up also had a huge effect on the market, which brings us to, what do you think will be the next black swan for this cycle? I think I know the answer, but
it's always ungrateful to talk about. It's always difficult to make predictions, especially about the future, as they say, right? But look, I mean, systemic risk always comes in the same form. It's actually in leverage, right? When you are taking something that you either need to repay or you need to get it back, or it's just too much risk at hand. And then that's usually where, counterintuitively, that's where usually liquidity flows, because it gives upside, right? But then when there's a gap, in liquidity, then it whole thing, kind of craters or collapses. And I think you said it, actually, like, it's not meme coins. It's not, many of the things people think about. It's actually something that people call today digital asset treasury companies, or crypto treasury companies, or Bitcoin treasury companies, however you want to call it. With the biggest player that there is today is actually Strategy for Michael Saylor. Or you have other players, but they are smaller in size, like MetaPlanet in Japan. And there's a lot of other ones, not only Bitcoin related, but Ethereum related. Then that's where I know I've been very critical about it. Just to say, like, Henry, just to tell you something. When I first time saw, it was called MicroStrategy, but Strategy, I thought it was brilliant. Because when you really, like, see what he is doing, actually, he borrows capital. So when you borrow capital and then you place it somewhere else, that means you're shorting, you're betting against what you're borrowing, and you are thinking that what you're buying is going to succeed, right? So it was actually brilliant, like, as a concept, like how, like, what he's actually doing. So I felt like at the beginning, I was like one of the biggest fans. I was even saying this is the smartest trade of all time. It is a trade. It's not like
yeah, for sure.
Yeah. But then what really, like, when I remember, like, at one point, it was, I watched a podcast, actually. I don't remember, like, who it was. And I had a conversation then with a friend of mine when, like, in that podcast, the person kept on telling, yeah, but there's these convertible bonds and it's all about volatility trading. And I came from a hedge fund background. So I was like, whoa, wait, what is he talking about? I should be, this sounds interesting. And then, like, with a friend of mine, I took a look how these products are structured. And then I realized, damn it, this is going to blow up because it's not structured in a way that it's sustainable. And that's why today, like, I'm the biggest critic, of digital asset treasury companies, because you have this inherent leverage inside, and then it's just a matter of time when it blows up, right? So to go back full circle of your story, digital asset treasury companies, biggest bubble in this market cycle. We know how bubbles usually end up. We don't know when, but they will not end. So.
Well, I think you're right. I think there's a lot of, and I speak to a lot of people, and they're very, very positive. And it's hard for us, I guess, crypto native people to have that criticism of something, because in its essence, it's beautiful. And we do all think fundamentally that Bitcoin over a long period of time will outbeat. It would just completely beat out any form of inflation, like without a shadow of a doubt. And so we have that vision, and so to kind of realize that vision and have a company, be the forefront of it is kind of interesting, and it makes sense. But I know the interesting thing I have with strategy is that I know through other people I've had conversations with, and I think it's quite obvious anyway, is that they're not really in it to, well, they are in it to build a treasury company and hold an asset that's going to beat inflation, right? That's the idea. But they do it very, very, very publicly. And there's a reason behind that. And if you were, there's a lot of companies that were doing it in the background, like Metaplanet is a great example. They've been doing it for a while now, and yes, okay, people announce it and stuff, but they're not at the forefront. And then I think like MicroStrategy consistently buying is also perpetuating this idea to create more treasury companies to buy. And then when you see this, everyone chasing the same thing, inevitably it creates a bubble. And it really comes down to, what if we do have a black swan event? Now, I think, is it dollar cost average like 60K BTC that MicroStrategy has been buying out, roughly around that? What happens that crashes down and they have to pay back that debt and they can't borrow anymore? Because it could happen. That is going to be so catastrophic to Bitcoin. It's unreal. Because as soon as they have to sell, what do you think the market's going to do? There's such a public company. Everyone's just watching their wallets like hawks, and that's all it takes. And then it'll be sort of a self-fulfilling prophecy that's a downward spiral, right? Like as most bubbles pop, right? It's chasing the bottom. And so there's so many people that have said, oh, what he's doing is really clever. And I'm not disputing what he's doing is very, very smart, and what they're doing at strategy. But I've heard many times that people have said to me, yeah, it's foolproof. They've got it sorted. And I'm just like, it can't be. Nothing is without risk, right? Even gold is not without risk. And so yeah, like some people just don't want to listen. And that for me is like one of those red flags of like, oh, okay, do you not want to hear the downside risk element of it because you just don't want to hear it because it's not positive to what's happening in the market? Or is it a case of you just don't realize? It's like naivety or yeah. Anyway, sorry.
No, I mean, look, you think, I mean, you emphasize two very important things, is that in the end, here we have a human bias, and the bias is towards, you can argue being very optimistic, but here is the case of neglecting obvious risks, right? And the obvious risk is that crypto is volatile, prices go up, prices go down. And second point, in the case of Michael Saylor, but also all these other digital asset treasury companies, the loans have to be paid back. They'll be paid back one way or the other. And if you actually put those two pieces together, very high risk also means issues on the downside, right? You have to pay back the capital at some point. You realize that then it's not such a solid investment proposition or even a thesis, right? Because one thing, so just to give you like a background, like one thing that you learn very quickly when you're a market maker. When I was a trader at the hedge fund, we were doing market making in FX, and also I was a market maker in the crypto industry. You learn very quickly that the price is always set on the margin. So that means actually just on the flow at the moment, the difference between the buying and the selling interest, that's how the price is set. So it's not like that I say, well, we bought so far $100 billion of Bitcoin, that's the price should be up. Like, no, actually, when things are being set on the margin, right, on the difference, then actually it doesn't matter how much you bought. If there is no further buying pressure, then your price will not stay where you think it should stay. And that's actually like what I also emphasize many times, is that we had this amazing run up because of the buyer buying. But when that buying stops, how is the margin being set, right? And then you basically have a problem, right? So not giving financial advices, and this is all for educational purposes, but it just illustrates like that, the time will come. Now, is it like 6 months, 1 year or so on? I think we're sooner rather than later at that point where things will become, a lot more volatile than they are today. And then it's not going to be pretty, unfortunately.
No, I agree. But again, that's our take on it. We could be wrong, proved wrong. But I also find that he doesn't. What I find interesting, and there are many methods to obviously make that Bitcoin work for you. He doesn't do
Yes.
anything with it.
Yes.
Like there's so much that you could effectively maybe even counteract the interest on the loan that you need to pay with the amount he's holding at the moment.
Yes.
And yeah, as far as I'm aware, they don't seem to be doing anything with it. Am I like?
Yeah. Yeah. I mean, just to tell you, like, for instance, many times people tell me, well, if he holds so much Bitcoin, why doesn't he just loan it out and earn then interest on that, yield on that, right? And that's basically like, how they can actually then manage, this and earn yield and then manage, further the treasure. But people don't remember that Saylor used to do that. And he did that back in the previous cycle. And then when the whole crypto markets exploded in 2022, he was very close to getting liquidated on his Bitcoin position because he was actually doing what I just described. So they learned, I mean, let's say like this, I hope they learned the lesson actually back in 2022, so they will not repeat it. But what people sometimes like say, why doesn't he just earn the yield actually through lending his Bitcoin in the lending market, is because he actually got that and he was ultra close to getting liquidated. So I don't think maybe that's the reason why they're not doing it. But again, then it just illustrates you again, this is not sustainable. Like it cannot play out in any way how, when people are very optimistic about it. And I just, again, don't see it like very, very fruitful for the crypto industry.
Well, it's not a company then. It's just they don't do anything. they buy Bitcoin, they borrow money and buy Bitcoin, and luckily it's trading. I think it was like 3 times the amount of holdings that they have at the moment. I guess maybe if they were able to sell half of their stock, they could just pay off the debt. I don't know. Maybe that's an idea, but it's I understand that the idea behind the treasury management, right? Because the concept, from what I understand, is that he had cash in the bank and the cash was losing its value due to inflation. So instead of having the cash, he wanted to have something that was anti-inflation. That was Bitcoin. Makes sense. Fine. Fair enough. I understand that. If you still have an operating company, but if your company changes completely to, hey, we buy Bitcoin, then that ceases to be a logical, step to acquiring Bitcoin, in my opinion.
Yes. Yeah. Yeah, I mean, many times, for instance, I always like the story of Metaplanet. It was a failing hospitality company or in the industry, but they basically had one failing hotel, they just didn't know what to do with that, and then they, the team, obviously, they basically do something called a reverse merger. So you basically take over the company and you repurpose, you redo the mandate, and then from then on, they said, we don't do hotels anymore. We're doing now Bitcoin company in Japan. It is what it is. No?
I bet there's a company that actually specializes in taking companies. They go to them and they'll basically say, "Hey, do you want to become a treasury company?" And they do that, pay a fee, and then they go off and do that for the next company. I can't remember the name of that company off the top of my head now, but someone I know that's like met them and he said, "It's really interesting." And I was like, "That's great. Well, it's all going well, but they're going to be held accountable if it goes sideways."
100%. I just want to emphasize here that there is something here very happening that's potentially very unfair to the retail who buys later on into this repurposed treasury companies, is that many times insiders buy into those companies before such announcements are made. So let's say you're an insider close to such deal and you know that the people are targeting some failing company that's publicly traded, right? And then you buy into that company before there's an announcement. And then when the announcement happens, you're sitting on massive profits because you had this privileged information. That's really, I think, as well, what a lot of people will be looking into in the future, because it's the reason I'm mentioning this. I don't speak it with certainty, but people who have done a little bit of review have seen in the trading activity analysis that such things have been happening, meaning that there was a systematic buying prior to such an I don't speak this with certainty, but if you take a look a little bit about the trading activity in these companies prior to the actually announcements of the repurpose of the mandate, you see actually that there on some occasions there was some buying actually in those shares. And then you can imagine it, if you have such privileged information because you're an insider and then you buy in prior to the announcements, I mean, then, obviously you are not doing things in line with the legislation and regulation. Let's say it like that, But I think like this will be something that the regulators will be looking into, in the following time, because it's obviously it's unfair, right? But also it's something that you could characterize as insider trading, right?
Yeah, for sure. I think so. I mean, that it is what it is. There's no way around it. It definitely is insider trading. And yeah, and it is interesting we're seeing, but I don't know where we are in that bubble phase. I think you're right. I think it is a bubble, and I think it will pop. And then when we look back at it, everyone will be like, "Oh, it was so obvious." Yet at the time, not a single person's really talking about it, right?
Sure. And the money is being made, and then not a lot of people want to ask questions,
No, don't ask questions you don't want the answers to. I think that's the motto.
Exactly. And
yeah, I just think that it is interesting. But anyway, moving away from that kind of idea and everything there, I think, do you obviously in the kind of whole crypto space, and I always ask my guests this as well, we've seen the usual trend is obviously the run up of Bitcoin, then you have Ethereum usual follow, and then after that, then you see what we would deem as alt season. Do you think that we're going to have one this time around, or do you think it's just going to be Bitcoin dominated? We've seen actually a resurgence of Ethereum quite recently. It's done really, really well, and I don't know if it's quite hit its all-time high, but it's been very close.
Yeah. So I mean, looks like the pattern so far was in all the previous cycle that you have first Bitcoin going up first, you have the Bitcoin run up, and then you have the so-called altcoin season, of the peak of the altcoin season 3 to 6 months later, which is actually quite significant time period, right? It's quite later than what you would expect, right? Now, if you take a look at the data, you will see that we did not formally have this, alt season, because most of the tokens or coins or cryptocurrencies besides Bitcoin are below their all-time high. So this is just reality. While Bitcoin is close to an all-time high, right? Now, I do, even though this is not a financial advice again, and I'm not, this is for educational purpose only, I do personally believe, that we are going to have a altcoin season. And the pattern is always kind of like the same, is that once you have Bitcoin running up, because Bitcoin is actually the biggest by market cap, you have, it's like what you can actually experience is that you have like this wealth effect within a industry where everybody's all of a sudden richer and feeling better, And then what happens is that people then start chasing because when Bitcoin is already high up, they're saying, well, Bitcoin will not do another 10x from here. But how about these other smaller coins, right? They might do 10x, and then the liquidity starts rotating, right? And that's basically like how the altcoin then season happens. We did not have it so far. I personally think we're going to have it. You could argue that in some of the cryptos, it did kind of play out a little bit. So for Ethereum actually did hit its all-time high. BNB, so Binance Coin, also hit an all-time high. Tron hit an all-time high, and a couple of other ones. But for most of the others ones, we kind of had a run-up, but it never kind of materialized beyond that. But I think it's going to happen. And just what I know from experience, these moves happen so fast. You just blink, 2 weeks blink. But imagine you're blinking. Yeah. Yes. And then like in 2 weeks, it's all done, So, and that's also the problem, right? Because how many people react within this like 2 weeks, right? They are probably again in their dreams, in their desires for another 10x, but it's not usually what happens. And then, the liquidity doesn't come in anymore, and then it all implodes, very quickly.
And it all goes back to, all implodes slowly, and then all slowly flows back into Bitcoin. It always seems to repeat its pattern. And I wonder if this time maybe everything that's happening with Trump has sort of postponed it, if that makes sense, Every time there seems to be a bit of a run-up, all of a sudden some new tariff has been introduced on some new country. And everyone just freaks out, so the market freaks out. And so there's never been that momentum. But I think the last couple of weeks actually has been very interesting because, like you said, BNB has hit a new all-time high. Ethereum has hit all-time high. And those are kind of also, and Tron, for example, those are very old, well-established protocols, right?
Yep.
So it'll be interesting to see where the liquidity moves now. And we've not really had the crazy meme frenzy, but I don't know. I don't think we'll have it this time. I don't know. Maybe I'm wrong. You never know, right? Like you can make all these predictions, you can be completely wrong, but I feel like that was very 2020, 21 meme hype, right? Everything
Yeah.
was just flowing into memes, and then it sort of has happened consistently since.
Yeah.
And yeah, I don't know, who knows, but that is interesting.
Yeah, I mean, just to say, is like what's a bit different, like this market cycle than the previous ones, is that for a lot of these hype type tokens, when they were getting listed, they were listed in such multi-billion-dollar valuations that pretty much the only place to go was down. So if you look at it like in the last year, 2 years, that's what was happening. And that's very different than actually in the previous market cycle, where a lot of this today well-established projects and tokens were listed at not high valuations. And I will give you like an example that a lot of people can relate to. Polygon, when they launched, it was launched at $200 million valuation. Meaning whoever bought had an opportunity to make money. But today, if you buy into tokens, I think the latest example from a couple of days ago was Story Protocol, that does actually things about IP rights and patents and so on. So they launch at 6 billion valuation and they earn revenue of $60 per day. Then like, where can it go? Like, even if you're just trying to be fundamental, the only place to go is down, right? And I think that's like the big difference this market cycle. And the tokens that don't have this feature are actually meme coins, because they all start at the same turf, which is close to zero, and then they try to make their way up. I do want to point out that today, if you take a look at top 100 coins, I think there's 10 of them in there that are meme coins. Watch, Shiba, with, I don't want to keep on going, but you get the point, right? So imagine it in the top 100, approximately 10% is meme coins. This is insane, right? And not only that, if you take a closer look, these meme coins have the highest volume. So imagine that. Not only there's like a crazy amount of them within top 100, but also people trade this stuff like crazy. So it again tells you like why, and then why people do that. They can argue, well, they like the coins for whatever reason. Nobody can understand it. But I think like there's a sense of equality or fairness or in this coin.
Meme coin expecting, no one buys a meme coin thinking they can't lose. They know there's a risk. Everyone knows when they buy a meme coin, there's a risk. I think that's true. And in that sense, it's a fair playing field.
Exactly. And also, it's like you don't hear this story saying, well, the VC is sitting on 40% of the supply, and here comes the dump, or I mean, I know that the teams, they do actually most of the meme coin launch pads actually structured as fair launch. So you just launch it and it's fair in there. And it's not like the team has any coins, but then they snipe the amount actually when the coins live. So of course the games are being played, but I think in principle, like you don't have these stories, some crazy VCs hoarding 40% of live. The founders have another 20. By the way, the founder just left after a few days after they launched. And there's another 20% in the treasury. And I don't know, like with a market maker, another 20%. And then you have this sense of unfairness. You have the price going down and then people are disappointed. Then you're like, yeah, of course, they go somewhere where they feel they have a better odds, right? Which they feel then meme coins could be that.
It's true. And I guess that kind of ties in a bit to Hype, right? Like Hype was a very fair launch. It was an airdrop for the most part. And I think you're right. I think because you said Polygon, Solana was a good example as well. Because I think when that listed was, I can't remember where it was next to nothing. I know they did their ICO on CoinList.
Well,
and then it wasn't listed at anywhere near where it is now, obviously. And so kind of we've seen that exponential growth. But yeah, you're right. When something comes in straight in at 6 billion market cap, it's like even Pump Fund when they did their official launch, right? It's just I was like, of course it's going to go down. This is crazy. This valuation on, and they're obviously they're one of the biggest platform launch pads, right? But at the time, they didn't have as much volume as what was the other one that recently launched? It was another one on Solana. I can't remember the name. Basically,
you mean a launch pad meme coin launch like Bonk Fund, with Bonk,
Bonk. Yeah, it was Bonk Fund. That was it. Yeah. They had more launches going on Bonk Fund. There was more people using it because people, I guess, would get a bit tired of Pump Fund, and so Bonk, having already a meme coin launched, had their own launch pad, and then when Pump Fund raised the funds, their initial valuation was higher than what Bonk was at then, and I was like, that doesn't make sense. Here's something that's being used more, and so obviously inevitably it went the way I think everyone, well, not everyone, but I would have suspected it to have gone. But it is interesting, and I think actually you're right. I'll retract what I said about meme coins. I think they'll still have a place.
Yeah, but and also, I mean, just to say, is like one thing that we really see in the crypto industry, which is very specific for our industry, is that you get liquidity so much faster than you would if you were running a traditional company and having equity investors. Because, I mean, think about it, like you're an equity investor and you're thinking, I need to pray to get an exit in 7 to 10 years, and then we see how much I get and if anything, right? But in crypto, you have projects, they build something, nobody even cares about it, nobody wants it. They launch, there's like a multi-billion-dollar valuation. And then you're wondering, like, what's the incentive for these guys or ladies to keep on doing anything? They got the valuation, they got the exit. The VCs got the exit, they don't care anymore. And there's no product actually, because nobody uses this stuff, right? And then you're wondering, like, why would anybody of them bother for the next many years to try to build a product market fit and something that people want and earn money from that, right? When it's just the whole incentive structure is completely misaligned. It just doesn't add up, right? And I'm not saying that waiting for 10 years for a little bit of exit is better, but it's just at least we have obvious gaps when token launches happen.
It's true. I think that is one area that really is lacking, and no one wants to talk about it too much because VCs are happy because they get to liquidate quickly. Like it's a dream for them, really. So like for me, I've invested in a few companies in terms of like angel investing, just because of like the initial 2017 run up, I made money on Ethereum, and I had this capital. What am I going to do with it? I'll do traditional VC investing, well, angel investing. And I still like, they're doing well, they're growing, but I've not been able to get anything out of it yet. It's like, asset great on paper, but I've not had like none of the companies have exited or gone public. So I've not been able to kind of get that liquidity. And so you're absolutely right when you say the incentives for the founders isn't there, because obviously in traditional venture capital finance, they get access to capital in stages. So if you're doing a seed, maybe these days you're raising 500 to 2 million ish, and you got to pay staff and everything. That's not enough money to just go, well, I'm not going to continue working, right? Like you're going to get an okay salary, and they talk about this in venture capital quite a lot in terms of like having fuck you money. Like you don't want to give founders fuck you money because then they lose the incentive to keep working on the product. If you want to keep them working on the product, right? At a certain point, if they're getting millions of dollars, the incentive just goes, all right, I'm set for life now. What do I really want to keep going in and building and iterating, or do I want to go off and buy a nice house somewhere and just live my life? So yeah, I think you're absolutely right. The incentive is really mixed up in this industry, and no one wants to, I suppose, talk about it because it benefits those that get in early, right? Like VCs and stuff, because they're able to liquidate in a few months.
Yes, exactly. And look, I mean, of course, I want for founders to make the money. I want for the VCs to make money. I also want for the community or the retail as well. I mean, there has to be something in for everyone, right? And you can argue, well, everybody takes different levels of risk, right? The founders take the most risks because they're in the company and they're waiting. They have to work there. Like it's not like they get an allocation there and then they'll go do another job, right? It means the VCs have to earn some money because they're the ones who provide substantial amount of capital early on. But also the retail has to be something in for them, because why would they ever then buy, right? Because if it's just negative experience, right? So I agree that let's make sure everybody makes some money, but definitely crypto is there. I mean, you have so many examples, ghost chains, only marketing, no product, nothing. And somehow they're alive there, or they're slowly died over many years, and it doesn't work.
I find the saddest stories of when you have chains that had a product, they were doing well, and some major incident kind of affected them, and then Axiom and the hack, or or I think what happened with I can't remember the name of it. It was a very good one that like. I can't remember. I even used it like during the last run. Did you ever familiar with like Tomb forks and Tomb and it was very, very degen. Anyway,
not there yet. I'm not there yet.
but anyway, there was loads of chains that were kind of utilized, and for whatever reason they might have a a flaw that was kind of exploited, and then after that, that was it. They were dead. They couldn't, nothing to do. And then you have these chains that have been pumped with like loads of announcements and no real utilization, and it's like, well, they're worth billions, and it is crazy in this world. But it is amazing. Like this, what else can you make like a 10x in a few months, right?
Yes.
It's
nowhere.
No, with I mean, there's risk, but not like, you know, I guess you could 10x if you like 4x trade and leverage, right? But like without leverage, you could still make a 10x to I mean, if you're really lucky, 100x to 1000x. But you know, that's just hitting the right meme coin.
True, but also want to emphasize you can do that. But I think like they did a study of pump fund returns for the people who trade there, and then you actually, what we find out is like that most of the people just lose money. There is few people with the right information or inside information that make the money, but on average, or even median, is just loss for everyone, right? Because you're coming in too late, right? And even with meme coins, as we discussed, it's the most difficult because there is no easy fundamental model to value them and then say, actually, even if I buy now because of revenues or whatnot, the price should be higher. But even because you don't have that, it's not even easy to make such calls or make such judgments. But, you know, there are people who came on very early on with SPX, with I will say it, with fart coin, you know, and you know, so there is examples where it went from zero to something, and whoever was there long enough or stuck around enough, there was money to make.
Yeah, it's true, and it's finding those. And I guess like the interesting thing with like Fartcoin and SPX is like they all of them have that sort of initial run up, right? But then it was dead for quite a long time objectively, and then all of a sudden it just picked up momentum, and then you could have still made money, I guess, if you had got in right when that momentum started. But then it obviously gets to a point where you think, it can't go up anymore. And then I had that issue with Peanut. I bought really, I think at a pretty good price, and I made some money on it. And then it went to like 100 million. I was like, wow, great. And then it dipped back down to like 60 or something. I was like, I'm going to sell. I'm in profit. I'm going to sell now. And then it just went up into like $1 billion market. And I was like, if I just had the cojones to hold a bit longer.
Exactly. But look, I mean, it's difficult to hold through such situation. And I also like this example. It's a traditional finance, but with Amazon, it peaked in 2021 and then .com bubble blew up. Many people don't know that it took until 2009 or 10 that actually Amazon price hit the all-time high. It's 8 years. Imagine we complain where it's like 8 weeks in crypto. Imagine being there for 8. And then you say, well, if you have invested in Amazon, I don't know, in the 90s, whatever. I'm like, man, who would hold for 8 years while it's in a drawdown formally, right? So investing is not easy. I think also we're touching on something very important, that whatever kind of investments you make, you should always think long-term. And ideally, should be backed by fundamentals or fundamental metrics. That can be the size of the community, the number of wallets, how much of people that hold that coin, revenues, if we're very traditional, you know. But there is no, in the end, there is no easy money, quick money. This doesn't exist actually. It's all, you can get lucky a few times, but systematically, either you are an insider or it's just you are holding the assets so long until the real value materializes. You know?
Yeah, objectively, if you held Bitcoin, you would have been, over the last 10 years, just held Bitcoin, did nothing else, held Bitcoin. You would have done much better than coming in, trading, and trying. And I think that's true. And what I do find interesting, though, and that kind of brings in another point, obviously, the Amazon example is great because, like you said, if you bought Amazon, but then obviously in 2001 .com bubble, it kind of collapsed and it took 8 years. That's a significant amount. We've not seen Bitcoin really go through a sort of proper crash, right? Like we've seen crypto crash, but I wouldn't call that the same as like an entire market crash. And it'd be interesting to see, right? Because if that does happen, whatever causes it, you know, I don't think strategy are going to be very happy about it if that does happen. But will people buy? I think there's always a bottom. I don't think, you know, when people say, Bitcoin, some people say, oh, Bitcoin's going to go to zero. They are obviously very anti Web3 and anti Bitcoin, this whole space. But I'm like, it'll never go to zero, because there's always a price point where people like me and you will be like, of course, even if it goes to zero from here, I'm buying it. You
will buy all of them.
Yeah,
exactly.
It's never going to go to zero from now. But obviously it can go a huge amount. It can significantly lose a large amount. And I think we have a very short history if we're looking at the economics of Bitcoin, and it hasn't tested a proper recession. It hasn't been tested in a proper recession. And I do think that's an interesting and great, if you see this in the future and we're going through a recession and for some reason, Bitcoin's around $5,000 to $10,000, buy it.
Yes.
Because it's one of those things that over time, if enough people still want to use it, it will inevitably, the value will still be there, because from the fundamentals of it don't change. And that's the most important thing. The fundamentals of Amazon didn't change. And, obviously you have meme coins and things that go to zero or chains that stop iterating, but Bitcoin has become effectively a store of value, in my opinion. And that it's already proven to be that use case. So that's a fundamental that will never change. And so, I think you're absolutely right in thinking of it as like a long-term investment, not just, hey. And I think, unfortunately, a lot of the companies that are coming in and buying now aren't looking at it from that perspective. I think Strategy had that initially, and it's sad because the motivation is the right motivation. It's just obviously they're not, in my opinion, going around it the right way, right? It came from a good place, I think. Might be questionable, but so I think. Where do you think that we are currently in sort of this cycle, which seems to be a bit different from a lot of the other ones?
Yes. Yeah. I mean, first you say it perfectly that no matter how long I'm in the crypto industry, I always learn that each cycle is different. This is what I really humbly say. Each time it's different. We also have a big difference compared to the previous cycles, that today, if you objectively look, that many of the buyers are actually institutionals, sovereign or corporates or family offices that have a longer term, historically have a longer term time horizon than the previous buyers, which were hedge funds, prop shops, retail, crypto whales, they were the ones who were actually buying. And you see that actually a big difference. You might hear news coming out saying a crypto whale that didn't move its Bitcoin for 9 years, moved it and sold X, 10 million, 1 billion, right? And these wallets, because back then, like when I started, it was only retail buying Bitcoin. There was no institutional investor touching this stuff. So today, the big shift is that you have the OGs selling because they probably had enough, and the institutional is buying. There's a really, really big difference, actually. Now, is Bitcoin going to become like a digital gold or not? I think actually it will be. And that's when you talk to a lot of banks, asset managers, and so on. When you hear them explaining Bitcoin to somebody who is not crypto native, you see this analogy of digital gold, how they actually phrase it to people to understand it better. Now, you are right that Bitcoin never went through a real recession in the US, but in the world, right? And because we had the central bank money printing for many years, and whenever something happened, they patched it with more money. Now, I want to point out, because I was finishing my university in those days and then kind of entering the professional world, counterintuitively, when you have a crisis, gold first goes down. And I usually explain why is the case is because people who manage capital, they have a portfolio. And when you have a severe crisis, the portfolio value goes down, and then you have margin calls. And then usually what people do is they sell very, very liquid assets to cover the margin calls. And gold is one of those very liquid assets that gets sold initially to cover the margin calls because they trade on leverage, right? So if you take a closer look how gold behaved in 2009, first it went significantly down. But when these margin calls play out and everybody who is meant to be taken out has been taken out, then gold skyrockets, like hard assets skyrocket, because then the buyers coming in and everybody who is liquidated, and buyers come in and then they take it up. And this is exactly what happened with gold. First, it went down in 2008, and then it skyrocketed in 2009 because it was obvious that money printing is going to be the way to fix the problems.
Yeah. Well, I think you're right as well. I think Bitcoin is a very, very liquid asset. And I think if we did, I genuinely do think if we had some sort of black swan event, not even crypto, like globally, that Bitcoin would be one of the first things to just crater, absolutely crater. But you're right. Overall, that is exactly what gold did. And I love that analogy because I've said that for many years. And I love comparing gold to Bitcoin as well, because a lot of people are like, oh, there's so many people control, such a portion. I was like, yeah, but the US at some point, not anymore, I don't think, but like a few years ago, they owned like 4.5% of the entire global reserve of gold. So it's like, yes, okay, you have some people that own huge portions of Bitcoin, but it's like, if anything, it is definitely more decentralized than gold, for example, where it's you have to go within the remits of, well, right now anyway, of kind of a banking system to get access to gold, right? You don't have to do that with Bitcoin.
Yes, exactly. And I think you made a perfect point, is actually that in gold you have a problem of custody because it's physical, and it all sits then either in New York or in London. Now with Bitcoin, you don't have that because you can actually self-custodize. This is one of the biggest innovation of blockchain, right? You own your assets, right? Rather than having it with someone else. I do want to point out that the big difference still between gold and Bitcoin is that gold is something that you call in finance a universal collateral. That means if you show up in gold in New York or in London or in Japan or whatever, and you say, let me pledge my gold and you give me a loan against that gold, everybody will do that. But they will not do that if you show with Japanese bonds in US. They will say, give me collateral. I give you this as a collateral, give me a loan. They will not do that because you have counterparty risk of the country. And gold doesn't have that. Now, we are not there yet with Bitcoin because it's not a universal collateral. Like, you cannot just show up anywhere and people don't know it. People don't understand the assets. They can't manage it, right? But once it becomes a universal collateral, then Bitcoin is the gold. Bitcoin is the gold, actually. And at that point, it will be a lot more scary because it will be a lot more connected to the financial system, right? Because it will connect it to everything else as well.
It will be. And at that point, it's, I mean, this is a very long-term horizon view, not the next few years, right?
No.
And Bitcoin, the price, I don't like to kind of like speculate in the price. And obviously there are other factors of the price as well, because, what a dollar is worth today is going to be completely different to what a dollar is worth in 10 years or even 3 years, actually, considering how much money they're printing. But like that aside, that, there's only ever going to be 21 million Bitcoin. Well, actually not even 21 million Bitcoin. Cause like, if you don't even count, yeah, exactly. Yeah. But let's ignore that for a second. Let's just say 21 million Bitcoin. There isn't 21 million. There's more than 21 million millionaires in the world. Yes. So not every millionaire in the world could own a Bitcoin. And that's just, it's as simple as that. It's a very, very finite store of value. And, if this story plays out as we both think it is, obviously we're biased in a way because we've been in the space for a while, then who knows where one BTC is going to be worth. I mean, I can foresee us stop talking about BTC values and talking about Satoshi values because it'll be so astronomical that people can't really wrap their heads around someone owning one.
Exactly. And first, I think this is one of the best examples ever. You have more millionaires than 21 million Bitcoins. I think this is like, wow, like the best analogy, like why the, long term it should work out. I also do want to point out, like, crypto industry is so unusual and so weird in a sense that today you have, through the crypto industry, one of the biggest drivers of buying debt in the world, and that is through stablecoins. Because actually, when you issue a stablecoin, and usually, by the way, I don't know if people know this, but the only people who go to Tether and they say, please mint me $1 billion, or 100 million, is the ones who want to deploy it into crypto, meaning buy Bitcoin, usually. So to buy Bitcoin, you're minting stablecoins, which then drive actually purchases of debt. I mean, if you would say this a couple of years ago, my brain would explode, like what's actually happening. And the reason why I'm mentioning is because very, very soon, we're going to have the market capitalization of the stable coins, 1 trillion. It will happen very quickly. And that means at that point, the stablecoin issuers are the biggest buyers of the debt, US debt, but they actually minted those stablecoins to buy Bitcoin. Like, you get it right. It's like a wedge, right? One thing pushes, the liquidity goes into Bitcoin, so the price should go up. On the other side, you have a driver then buying the debt, which is, again, this debt, it's not like I'm buying your debt. They issue more debt and then they buy it, right? So again, it's just like the dynamic, it just shows that you have network effects here that are really not obvious. We have to understand them. It's a complex situation. Like we also emphasize, it's a complex situation with strategy, what's going on in the background, right? Today, you cannot just think very linearly. That maybe was fine many, many years ago in crypto. But today, crypto is very complex. There are network effects in TradFi, in crypto world, and it's a very, very different dynamic that we need to understand.
No, I completely agree. And on kind of off the topic of that as well, I think it's very interesting where USDT is today, because let's be honest, the past cycles, it always came around like, oh, USDT isn't really backed by anything. It's it's a huge asset risk. And to be fair, I think in the 2017 run up of Bitcoin, there was murmurs that, Bitfinex and Tether, obviously, for those that don't know, Bitfinex and Tether are obviously the same entity, were minting USDT to prop up the price of Bitcoin, which is, I guess, is happening now, but on an institutional level, right? But at least now the USDT is backed by US treasuries, so it is actually physically backed. And I always find it interesting because there's always been contenders coming up against USDT, but it is the standard in the industry, and it doesn't seem to be going away anytime soon. And I think what Circle have done are impressive with USDC, and obviously they recently traded. I think they went public, didn't they, Circle, and they did pretty well. But I don't see it really kind of competing at the same level as it's because Tether's foothold is so strong, and also I guess USDC is sort of in some sense kind of held accountable by the US government, right? Whereas Tether isn't, as far as I'm aware. Maybe I'm wrong. I'm always happy to be proven wrong, but
Tether is formally offshore, so they know the entity that hold. In the end, they hold U.S. government debt, so they're accountable in that way, right? But still, like how they manage the stablecoin, it's not. They plan to issue a different stablecoin initially to comply with the Genius Act in U.S., right? So Tether will be different than the U.S. Tether. It's kind of like what we imagine, right? But I think that today, maybe these concerns are less. I don't think they're zero, but they are less, right? But I really also want to point out is like a lot of people, many times, we touched upon it, like why are stablecoins used? You basically have big investors who mint the stablecoins, and then they buy Bitcoin, and then you have this liquidity being shuffled around, right? In the crypto industry, for moving assets and things like that. And then I always make the argument saying the payment case for stablecoins is non-existent, right? And I always have a hard time like explaining it to people because it's difficult, like in one sentence. But the reason why, in my view, payments and remittances will not increase the market cap, because when you make a payment, let's say you move assets from Latin America into dollar stablecoin into Asia, and then you go out, this how long this increase in the dollar stablecoin exists is actually just microscopically fast, right? So it's kind of like you go into a dollar stablecoin just to move it across the world, just to get out, and it's like it disappears immediately, right? So you might actually, even though you have a lot of payments in the future, happening to stablecoins, what will happen is that you have velocity of these dollar stablecoins being used for payments will be very small, right? Because just things move extremely fast. And the reason why you today have a lot of dollars for payments is because payments take several days. Then these currencies have to exist for as long as the banks need time to settle. But if they settle in a millisecond, why do you need a lot of dollars to settle in a millisecond, right? You don't, right? So that's kind of like how I'm trying to like convince myself, but convince others why payments and remittances will maybe be microscopic, but in the future, 99.9% of all dollar stablecoins is just for trading to move assets around.
It makes sense. Like it's so much faster. Imagine just sending USDT on Sol in comparison to Swift, right? Like it's just so much faster. And I also find this interesting because obviously that's Ripple's whole world, right? Like XRP, the whole back end of that's they're trying to plug into traditional finance, and I wonder, is that necessary? That's my kind of the argument against it. I'm not saying it's going to go one way or another, because it very much could be, hey, right, we want to just plug this into our old financial system and let's upgrade Swift, essentially, right? Like let's just make a faster Swift. But like you said, if on-chain already solves that problem, really, like what's the purpose?
Yes. Exactly, and I think like the real the moment when we all have wallets and when our assets are in these wallets on the blockchain, right? Which will take a bit of time, right? But I think like then that's really the end game. But I just also want to emphasize, like I personally think the banks were not going to collaborate on that. They actually make money on the friction. They make money on that it takes so long and so on. So I don't think like this is a easy way out, because many times people say, this bank is working on stable coin or this. No, they're making money on the old system. They don't have a lot of incentives to cannibalize themselves, So, maybe payments will be solved in the blockchain in a different way, but in emerging markets and so on. And but still, I think the dynamics between crypto and the real world and stable coins and Bitcoin is just very fascinating to me personally.
It is. It's a long term. It's definitely not going to happen in the next few years. But like it is a long term vision of like you will be self custodial of your own wallet. You'll be custodial of. We don't need banks. That's fundamentally what this is going to become, right?
Yes.
The demise of the banking infrastructure, because it's just not necessary, and I mean
it'll be different than today.
Yeah, a little bit. But I mean, it's good. I think it's progress, right? It is really progress, because I guess the banking infrastructure works, and governments maybe won't want to embrace this. They're going to have to, but they're not going to want to embrace it because, they can still control banking institutions, and then inevitably banks can control whether or not you can bank with them. There can be all these restrictions, and I'm not saying that there doesn't need to be some level of kind of control to stop bad actors and stuff. Like, let's be real. Like, crypto makes it very easy for a lot of people to kind of move around, but it also stops ultimate authoritarianism, doesn't it? Like, it stops kind of governments controlling you or trying to control your bank or control the banks to say basically get all this information. So it's very interesting, because there has to be a shift, because it's progress, right? Things develop, and you can't stop progress as much as governments or banks would want to stop it. So it's interesting to see how this is all going to play out into the future, just observingly, rather than obviously being involved in it as well.
Exactly. And just to say that governments will not give up easily. They have their tool. It's called CBDC, central bank backed digital currencies, and they were going to try with that. I mean, I think the most clear example is in Europe, where they already announced the digital euro, and they want to roll it out, and they'll roll it out to everyone, by the way, on retail as well. So, it's just natural that the governments in general don't want to lose power, and they'll give away power. I think it's a unique situation in the US with the Genius Act, that perhaps the new administration recognized that for them, stablecoins are a critical way to get more funding into their debt, right? And they're leveraging that. But for instance, Europe doesn't have this benefit. The market cap of Euro stablecoins is like $500 million. Nobody uses them because maybe no demand or market need, right? And for them, why would then you do stablecoins in there? You want to do CBDC and then control as much as you can, right? And leverage the technology, right?
I think if they were smart, which I'd argue they're not really, but if they were smart and they wanted to really kind of control, is that you'd have to essentially go to war with the banks and just roll it out and say, hey, everyone can now, very similar to what China does with is WeChat, right? Like, you can make payments and stuff through WeChat and stuff, and they have complete control, but they've made it so simple for the end user. No one's really objected. They've kind of gone like, and I'm not saying that's the best example at all, but I'm saying from a government perspective, if they were going to be clever about it, that would be the way to do it, to just completely roll out with it everywhere and be like, hey, you can just have your currency on this wallet, it's a digital currency. You don't need to use the bank, but they're not going to do that because, let's be honest, a lot of politicians are in the pockets of the banks. So there's kind of this kind of conflicting thing happening.
Yeah. I think China is a very interesting example, right? And also, I think like the dynamics between the offshore currency and the onshore, right? Which onshore is obviously tightly controlled. Offshore, goes to Hong Kong and it's managed in a very different way. Look, I mean, to be honest, I also see the opportunity there to connect geographies and countries around the world. That's where I see also a big opportunity. I know that there are some projects like that happening, like M-Bridge, which connects a couple of countries in Asia, and through CBDC, actually, they want to manage their cross-border payment flows. So again, just the technology is very interesting. I think it's all about how you use it, right? Especially in the context of governments or banks as well. And but again, what I have seen in the last 10 years and even more is that the disruption always comes from the crypto within, because and then we pick and choose what survives and works, right? And that's where I see like the big, like if I would have to make a conscious like effort and a bet, let's call it like that, I would always bet on the crypto rather than on managed approaches, closed blockchains. There's no network effects there. You cannot scale, you cannot grow.
No, that's true. And it's kind of like that whole argument for AI as well, in some respect, is making it open source, right? If you make it open source, then it's just going to grow faster. I mean, that's dangerous as well, I guess, in some respects, but it's one of those things. It's a network effect. And even when it comes back to Bitcoin, I think, Bitcoin, we've talked about it, we view it as a store of value. That's really where its strength is, right? Like, it's too slow to be a replacement for cash. It just is. And, there are kind of scaling things we could potentially do to it and upgrades to the chain that could make it faster, but it doesn't need it, right? Like it's fast enough for what you need it for. And as a store of value, it's great. That wasn't the vision if you read the white paper, right? So it's interesting that like it came from a different place, but obviously the community has sort of decided this is what it is. And it's kind of touching back on what you said, like, we will decide what it is, and then that's how it will be used in some respects. And same with like other protocols as well. It's like the community, even though someone might have a vision of how they want it to be, that might not be how it kind of takes off. And as long as your protocol or whatever, or in this instance, obviously we're talking about like stable coins, if the community decides sort of this is the direction we want to go, that's what's going to happen. Because unless you're like China, completely authoritarian and you control the narrative, but yeah, and then cross-border friction is just going to become a thing of the past if this goes the direction we think it's going to go.
Yes, exactly. And also to add on that, I mean, today, even like the stablecoin issue, as you heard about this from Circle and from Tether, they plan to launch their own blockchains, be that layer 1 or layer 2, to further reduce the frictions when it comes to moving stablecoins, which is all about the fees, actually, right? In a nutshell, right? So, and I agree with you. I mean, 100% around Bitcoin. If you read the white paper, the first sentence says electronic peer-to-peer payment system. And it's not that, right? But I think like it's like in any startup, right? I mean, I'm giving an analogy to a startup. If you read the pitch deck of a startup when they're just starting, and then you read it 2 years later, 5 years later, 10 years later, you will tell me this is not the same company. And that's the point. That's the point, actually, right? Because the team needs to pivot, they need to adapt. Even something that works for you when you are making 1 million per year will not work or be very different than you're making 10 million per year. And likewise, 100 million per year. It's a completely different company, So totally normal. I'm personally totally fine with that. I agree with you. Bitcoin is perceived today as a store of value. Nobody's really doing payments or paying anything with Bitcoin if they're smart, right? So it's just not how many people think about it. The use case is there, and we need to focus on the use cases that work.
Yeah. No, I agree. That's true, though. No one wants to spend their Bitcoin, especially these days. Yeah, no. And yeah, well, I guess, like, did you, yeah, I think it's a good place to kind of wrap up. It's nice. Thank you very much for your time, Anton. Really appreciate it. And like, did you want to mention anything about what you're doing in Dubai and stuff before we kind of finish up?
Yeah, so happy to be, I'm chief business officer at Freedex. So it's a next generation crypto exchange, both for like newcomers, so people who are just entering to the crypto world, but also for professionals. Very happy to say we launched several weeks ago. So the exchange offers, products and services like you would find on big platforms like Spot, Perpetuals, Earn products, and so on. Regulated as a VASP, a virtual asset service provider out of El Salvador. But even though I'm in Dubai and UAE, we don't offer products and services in the UAE at the moment or to UAE clients, And very excited what the crypto industry is, going to bring in the next years. I think it's even more exciting than when I started, and it's going to be a blast. And looking forward to the next 10 years, let's say like that.
Yeah, no, I agree. Well, thank you so much for your time. I really, really appreciate you taking the time to meet today. And hopefully we'll get to do this again sometime soon, and we can kind of delve into some other areas as well.
Awesome. It will be a pleasure. And thanks very much for having me.